And then it sounded like the trust item that you mentioned, it sounds like it's similar to a 10, like almost like it would be an alternative to a 1031 exchange almost, right? Like you set up the deferred trust, and then it sounds like it almost accomplishes the same exact thing, or does it?
Yeah, so kind of. It kind of does, but it's more similar to an installment sale. So, and people do this all the time in business. I'm going to go buy $1 million business, but I'm not going to give you $1 million right away. I'm going to give you 200,000 a year over 5 years, right, to help with cash flow and things like that. So the deferred sales trust is a great mirror of that. It basically says, I'm going to sell this property, so you, the end buyer, will still get the full property, but for me as the taxpayer, I'm going to chop up the segment, the amounts of money that I receive every year, so that I can control what my capital gain is going to be. If I don't want to pay capital gain on $500,000 today, I'll just chop that up into small segments and pay capital gains on 100, and I can handle that a little bit better. But the cool thing is, the remaining amount inside of the trust, it's not just stagnant; it's also reinvested into other things, so it's continuing to earn while you're deploying the other capital that you got in other places.